Hey, Job here. On this channel, I invest 100% of my income into growth and high yield income ETFs to create monthly cash flow that will eventually cover all my expenses and replace my salary. It's been a challenging week personally, as there was a medical emergency that happened with my mom back in Canada. She had a minor stroke and is currently in hospital. Luckily, she's on free healthcare there from her province, so I don't have to worry about the finances of it all too much, though there is some related costs that will cost a couple of grand that I'll shoulder to help out. We need to sort out some stuff like power of attorney in case it happens again, get a CPAP for her because she has sleep apnea, and that could potentially be exacerbating brain issues given the airway obstruction events. And that's one thing that's not covered by the health plan, so we'll have to pay for that out of pocket. But yeah, it was all very scary, but she's luckily recovering very well, making good progress day to day, but it's definitely going to be a long road to recovery. And just glad I have the buffer to kind of help out, even if I can't be there right now physically. So sorry for getting so personal, but it was a lot this week. And with all that out of the way, we'll go over the health of the system that's going to help pay for all that. Like we'll go over my week 64 portfolio updates since I started the strategy back in May 2025 last year. I'll go into all the details of my performance this week, breaking down how I outperformed the S&P 500 by 3.7x with my 1.7% total return gain. I'll check in on my margin health, all my dividends received, and end with the finance video of the week. All that said, as usual, you'll get radical transparency on this channel, whether the market is up or down. You'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all that transparency, give a like and subscribe. Just a quick disclaimer as usual, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. So make sure you have a good read of this whole disclaimer. As far as kind of the strategy that I use, you can kind of see the weekly flow chart that I use every week to live out of the brokerage and invest 100% of my paycheck. I won't quite go over this week. If you want a deep dive of this, check out the video at the top right or kind of have a pause and take a look at it. But otherwise, let's just get started. So if we pop over to Robinhood, you see this is my full light portfolio, nothing hidden. So ended the week nice and in the green. I was up a little bit on Friday, 0.06% up, $150 or 0.33% after hours and $782. So ended the week at 237.4K. On the week, like I said, I was up 1.7%, so 3.9K. If we compare that to VU, in the same time period, VU was up, the S&P 500 basically was up 0.45%. So I outperformed it by more than 3x, which is awesome. On the month, sitting back in the green, up 11.5K or 5.10%. On the 3 months, up 16.1K or 7.27%. Year to date, I'm up 50.8K or 27.25%. On the year, up 45.6K or 23.81%. And if we go to all, up 32.29% or 57.9K. So again, this is all in total return. This includes dividends. This includes margin interest getting deducted, capital gains, all that stuff. So this is kind of the whole shebang together. So pretty awesome for the year, honestly, when you look at that, like 27.25% compared to the S&P's 13.17%. If we even compare it to like NASDAQ here, if we take a look at UM year to date, that's up 17.9%. So beating both the indexes, which is pretty awesome to see. So doing pretty well with all the dividends and all the positions all combined together. So pretty happy with the performance this year. Don't expect to beat the indexes like this. Like generally I'd expect to either match or be slightly under it. So pretty awesome to see. If we pop over to my spreadsheet to kind of take a deeper look at things, so we can see here that if we add up all my positions together across both my growth and my high yield ETFs, I'm sitting at 441.2K. So this is an all-time high for the gross value of the portfolio. I've never been this high, so it's pretty awesome to see that this keeps growing. Like, and the whole idea is for me to not touch this gross value and just kind of keep investing and keep compounding that with every paycheck. And I'm never selling to take things out, to pay for things. All I'm doing is using margin here, which is sitting at 204.5K to fund my whole lifestyle. And that's basically taking a loan against the full asset value of the portfolio. So really the gross value never gets touched. What gets touched is the net value because you minus that out to the gross value and I get 236.6K. So that's where all the numbers are sitting there. If we pop over to the total return column versus the unrealized gains, we can see here that pretty positive overall. If we go off the total profit of the total return, I'm sitting at 116.1K in gains, or 49.07%. So huge gains here in the total return column. So that includes dividends, capital gains, and all that against the margin value, net value. And on the unrealized side, sitting at 17.4K in gains, or 7.38%. So this is without the dividends, and this is including the realized gains losses here, and then also all the unrealized gains from this column. So we've seen that, like, with the little bounce back we've had over the last couple of weeks, things have kind of flipped back to the green here on this side. Definitely some little outliers here that are still in the red. DRAM still lagging behind here, but recovering. YMAX is actually back in the green in total return, which is cool to see. ULTY just slightly in the red here still. Like, it might make it in the green. We'll see. Goop here. Google has kind of just struggled in the last little bit and has kind of taken a beating. So kind of excited to have some more YouTube income come in to buy this dip as it comes in. Blocks and BTCI still struggling. Crypto overall just still down, right? Hasn't quite gotten a strong upswing yet. We'll see when that happens, maybe later this year. And everything else, though, in the green, like TDAQ, TSPY, OVL, MLPI, KGLD, GIX. So really cool to see. Yeah, even in all my monthlies right now, everything's in the green. So there's not, next week, there might not be any dips to buy if I just kind of DCA into all of them. So yeah, you can kind of see that things are working out nicely as far as like total returns versus the realized gains, right? All in the green. If we go to see how stuff is split between the growth and high yield income, so what makes up the 441.2K? So 194.1K of that is growth, so roughly 44%. And then the high yield income sitting at 247K, or roughly 56%. So large majority into high yield income. Maybe eventually one day I might sell a good chunk of growth and kind of push into high yield income. We'll see. Not quite brave like that yet, but who knows? If something happens that forces my hand, maybe. But for now, yeah, just going to sit tight with that, just because growth kind of helps stem any NAV erosion and kind of helps the portfolio keep appreciating despite all the income I'm kicking out. But I know some of you in the comments kind of encourage me sometimes to go full income, but not quite there yet. As far as my margin health, we can kind of take a look here. So my equity is sitting at 53.65% this week, so nicely above 50%. My gross value, margin used, and net portfolio value, that's all the same as we went over. If we take my blended margin maintenance ratio, so I have 25% across the board, across all my positions, you get a margin maintenance dollar value of 110.3K. So this is the value my net portfolio value would have to drop to basically hit a margin call. So right now that's a 126.3K buffer. And so that's a 53.4% buffer from a margin call. And this is kind of what matches roughly what you see in Robinhood. But as I kind of say every week, like, I don't like going off of this just because this number is typically bigger and makes you feel safer than you are. The most important part, I think, is to look at the gross portfolio value, because if there is a 28.65% swing on like all the assets, and this is not necessarily the market because my portfolio is like a lot more concentrated in the general S&P 500, that would be the equivalent of a 53.4% drop. So like if we even kind of calculate this out and take like the 28.65 times my leverage multiple right now for the portfolio, that's 53.28. So that's roughly the margin buffer. Right? So very important to kind of keep your amplification, your leverage multiple into account. And how you get this is basically by taking your gross portfolio value and dividing it by your net portfolio value. And so whether you take money out or keep investing, like, this will get affected. So that's why I like kind of keeping this in mind too, just to see how much I'm being amplified on any day's gains. So like even the day's gains, like that's basically kind of being affected by that number. So you can kind of see here the 0.03% if it was like on the gross portfolio value, but actually it was up 0.06%. So you see the amplification there on a more small level. As far as my margin buying power, I'm sitting at 82.6K. So you get that by doing your margin total minus your margin used. So this is my money I could technically just fully reinvest in the portfolio if I wanted to. If you take half this amount, that's actually cash available for withdrawal, so 41.3K. So this is cash I could fully take out of the portfolio if I wanted to in case of emergency. And then even if we game this out, like, we could potentially pretend we're taking out that money, 41.302K. I went negative here, but so even if I did that, my equity would still be at 44.28%. My margin buffer will go down by that same amount. And then even my margin buffer here on the net portfolio is still 43%. But again, my margin buffer on the gross portfolio value goes down to 19%. So definitely gets tighter. If there's a big swing, my leverage multiple goes up 2.26. So it's doable. Ideally, I don't want to do that. That's why I kind of keep this buffer high. But you can see that it's potentially possible in case of a big emergency. But ideally, don't want to quite do that just yet. So that's where the margin health's sitting at. So overall, relatively healthy this week. Definitely want to keep pushing on the margin buffer, get that up, and the equity over time as well. but sitting pretty nicely. As far as my income coming into the portfolio, so I'm sitting at $5,563 a month. So that amounts to 66.7K a year that I'm making extra, 1.2K a week extra, or $182 a day. So that's roughly a 27% distribution yield if you go off just the high yield income assets in the portfolio. So pretty strong yield there. If you go off the full portfolio value, it's closer to 15.39%. So feels a lot more sensible when you go off the full value there combined with the growth. So if we add this yearly dividend income that I'm making extra, that you add that on top of my normal salary of 175K, that pushes up my total salary to like 141.7K, which is pretty awesome. If you include my 7% annual bonus that I get, that pushes my normal salary to 107.2K. And then if you add in the dividends, that's 254K all in. So pretty awesome when you consider that. I almost kind of consider this passive income as like a second job that I'm not having to work, essentially. It's kind of growing in the background. And like people ask like, oh, won't you get taxed on all this? And like, well, if I took a second job and made 66K extra a year, I would get taxed ordinary income on that too. So in a way, it's a lot better deal there because I'm making that a lot more passively. So that's kind of how I see it. But then also like some of these dividends are more tax efficient. There's ROC. Some of it, yes, will be substitute payments because of margin, but a lot of it can actually be pretty tax efficient. So it's actually more efficient than a normal job tax situation. Right? And then what's great is that what's not great, I have to pay a lot of interest on this balance. So 204.5K of margin balance. I pay a 4.5% interest on that. And that's roughly $763 a month of interest that I have to pay. But with all this leverage, I'm actually making 5.5K in monthly income. So that's a really positive margin spread, 4.8K in margin spread. So basically a 22% yield after the margin interest. So pretty great spread and keeps growing. And it's growing a lot faster than the margin interest is. So that's the whole key to this, like really arbitraging the margin and the income that I'm making against the interest that I have to pay on it. So really great spread there that will just keep growing. So for me, kind of love this. Definitely some risk to it, given how high the margin balance is. But yeah, that's why I kind of keep going over this margin held every week. I'm monitoring this like very closely and obsessively. So if we pop over to Snowball and kind of check deeper into the categories here. So I have this split up a little bit more granularly just to know like what each part of the portfolio is doing. So like the ultra yielders here. So that's like roughly 22% of the portfolio. So that's still in the positive. So up 11.5K or 9.33%. So you can kind of really see the NAV erosion at play, right? So I have 123.6K invested into it, but that value has come down to 100.8K. A lot on the back of like YMAX, ULTY, BTCI, and blocks struggling right now, but GIX and Chippy kind of holding down the fort there. So you can kind of really see even between capital gains and dividends received here, which is nice. But whenever BTC has like an upswing, hopefully BTCI and blocks will kind of climb back out of here. So I've been kind of accumulating as it's in the lows here, as you can kind of see with like blocks, for example, right? I've been just really buying in this dip here. I've been buying as it's been going down, but keeps going down. So we'll see if it keeps going or if this is the lows, and then we'll kind of get that bounce back. But I'm confident given its credit put spread and its like diversity here, will hold up a lot nicer overall. I mean, even compared to like BTCI, right? You really see that. So BTCI in that same time period year to date is down 36% and blocks is down 25%. So this is kind of why I've been kind of favoring blocks over BTCI lately. It falls like crypto performs pretty closely. Sometimes BTCI will do better, but like overall it holds up to its price value a lot better blocks on top of giving more yield here. So 35% yield versus BTCI's 27 here. So that's the ultra yielders here. So anything above 20 to 30%. The bread and butter of the portfolio, those are the anchors here. So this, you can kind of see that no NAV erosion. The capital invested here is actually appreciating with capital gains plus the dividends. So that's sitting at 33% allocation. So that's all my index plays essentially, right? XPAY, TSPY, OVL on the S&P. TDAQ for QQQs, MLPI for energy infrastructure, and gold here, and BCAT, which is a little bit more diversified across multiple sectors. So everything in the green here except Goop, but hopefully as Google swings back, I'll just keep accumulating here in the lows. And that's up 12.66% or 17.6K. On my hedges here, so IALT and CLSE holding up nicely in the green, kind of just doing their thing. Like I'm hoping this capital stays like relatively stable, like this 40K stays in that range. And that's just kind of like a 10% hedge in the portfolio. I'd rather still be buying assets as a hedge versus buying the put insurance. Because yeah, I didn't like the feeling of kind of paying insurance on the green months. And I know everyone has a different philosophy on that, but that's totally fine. As far as my growth anchor ETFs, sitting very positive, up 54.74% or 67.1K. So that's 34% of the portfolio. So great appreciation there. All mostly in the green here, except for DRAM, which is slightly in the red here. And it's very small position. Right? This is like percent of the growth slice, but like 0.2% of like the overall portfolio. So this is what's kind of keeping the whole portfolio appreciating. But right now, everything apart from the ultra yielders here are appreciating. So this is what's really helping offset any NAV erosion that might happen on this end of the portfolio. If we check in how it's doing against the S&P, so we can kind of really see and compare this week. So again, this is going to be a little bit different than what we saw in Robinhood, right? Because like this includes the after hours, and then also this is not quite the same, but it's more to see like how we trended, general trend line. So we saw that like we were kind of down a lot more compared to the S&P because of the margin amplification. But here we had some successive green days here that really helped boost things up. So you can kind of see that there. So ended the week a lot stronger than the S&P, which is great to see. Year to date, you can see that there's been a nice bounce back and kind of get that again, that amplification helping nicely to kind of outperform. So still quite up against the S&P here, up 27.53% versus its 14.74%. So really nice to see. Like kind of see how the down weeks that we had kind of went down quite a bit. Really, you see the margin amplification at play with how much things move. As far as the heat map, my favorite part, I really see that it's a very green week. So a lot of it led by MLPI. So with kind of like war stuff kind of popping off again. Like this is kind of my indicator a little bit for what's going on with the war. Like if war stuff is popping off, this will go up because the price of oil goes up. And then if they're talking about some sort of peace, which I don't quite believe in right now, given all the volatility of the whole situation, this might be red. So this is kind of my indicator position for what's going on with the war. So this week, very green. So that kind of tells me that like stuff is popping off again. PMO momentum doing well this week, up 2.4%. Large cap value doing well as well, up 1.3%. XPAY actually outperformed VU, which is always cool to see. TSPY just slightly underperformed VU. TDAQ just underperformed QQQM, which is good. Generally, this is what you'd expect, given that covered calls are relatively capped, but because of their daily 0DTs, that definitely helps adjust things better. That's kind of why I condensed to TDAQ and TSPY compared to QQQI and SPY-I. They just have a lot more flexibility compared to like the 30-day options. GIAX up a lot this week, which is cool to see, up 3.5%, beating out pretty much everything except MLPI. ULTY up a lot, and YMAX even compared to VU. BTCI struggled a bit this week, but then Blocks was up a little bit. So yeah, always kind of nice, just nice to see all the different correlations between stuff, right? And OVL up a lot more than VU here, which is cool to see. BCAT was down a bit, 1.1%. Goop here down 2.7%. DRAM up a lot, 11% this week, quite a bit. So you can kind of really see how we did this week. Year to date, we can kind of really see what's struggling. So BTCI Blocks, obviously, crypto has just been kind of struggling all this year. Blocks kind of holding up a little bit better here in price percentage wise. Goop down a bit, DRAM as well, but everything else in the green. Chippy up a monster, 42%. SPMO up 29%. VGT up 33%. XPAY up 13%, matching VU roughly. CLSE up a lot, 12% as well. So just some good indication of how well stuff is doing this year. If we pop over to the dividend calendar, we can kind of see what we made this week. So if we add everything up, so this week, so Monday, we made $93.97. And then on Thursday, we made 1.44K. So that's 3.1453 plus 165.49 plus 827.83 plus 94.91. So all in all this week, we made $1,535 this week and 34 cents. So pretty awesome. So made $50 from Blocks at 35% yield on Monday, $43 from GIX at 23% yield. Really been impressed by GIX and how well it's been recovering. It's awesome to see. This is kind of like in the ultra yielders, but it's so diversified with like kind of like its index stuff that it holds that like it's almost like an anchor, which is kind of cool to see. And yeah, Chippy ended up getting $353 at 39% yield, $165 from ULTY at 60% yield, a big $827 from XPAY at 20% yield, YMAX $94 at 41% yield. Some days, honestly, I'm almost thinking some days that maybe I could sell out of YMAX and potentially just kind of push it all into Chippy because their yields are actually kind of getting pretty close together, and I wouldn't lose too much income doing it. Would definitely realize some losses here, but that's maybe something to think about that I have in the back of my mind that I was thinking a little bit about this week. I think Chippy would just have a better time appreciating, but then there could be that eventual downturn from chips too, and that might might kind of just end up in the same situation, right? But something I have in the back of my mind potentially. But long week overall, still trending towards like 5.1K this month in dividends, which is pretty awesome. Definitely not going to be beating last year's dividends in August. So last year we made a strong 5.7K. So we'll just be hitting 5.1K. But everything else, apart from October, I think we should be able to beat September, November, and December here. So you can kind of really see that year over year, though, I've just been beating last year's dividends. So really cool to see, and really seeing the system at work here. Like all the investments are really contributing to all this income. Yield on cost wise, you can clearly see here, ULTY, YMAX, right? How the NAV erosion has affected it. Chippy, the opposite of NAV erosion is NAV growth and yield growth. You can kind of see here that like my dividend this week was 39%, but given the capital appreciating, the yield on cost is closer to 47%, so even more than YMAX here. Blocks down a little bit on given that it's come down. Same for BTCI. But you really see this core section here. This is what I'm really been focusing on this year as far as like investments on top of a little bit of GIX here. These are just holding up in NAV and yield quite nicely. And that's why I'm kind of been really focusing on these and less so on these like income I'm getting from ULTY and YMAX. I'm basically investing into this core section here, even Chippy and GIX and blocks. This is all kind of going towards here. So great little anchors here as far as kind of holding things up. So yeah, that's how the dividends are looking. As far as any portfolio thoughts, again, nothing major this week. I think I just talked quickly about like the potential YMAX to Chippy swap. That could potentially be a thing. So that'd be 11.9K. I could potentially just put into Chippy, but Chippy is already a pretty big portion of the portfolio. So it'd kind of be going very concentrated in chips, but we'll see. Just thinking about just random thought I had this week. Let me know what you think in the comments below, given everything. There's definitely a lot of not fans of my YMAX and ULTY positions. This probably comes up the most in the comments, but hopefully understand kind of like what I'm doing there as far as like I'm not really investing in them anymore, and just taking any distributions I'm getting from that and reinvesting it into kind of these safer yielders here. So they're kind of getting funneled into that gradually. So if there's a little bit more kind of NAV erosion there, that's fine. I'm okay to deal with that because they're a relatively small position in the portfolio. Like between these two, that's like less than 6% of the portfolio. So in the grand scheme of things of 441K, it's not that much, which is crazy to say given it's a lot of real money, but like that's kind of how I feel there. And as far as the finance video of the week, so this one, let me just paste it over here. So just wanted to highlight Velocity Portfolio, Rob's new series here, Living on Margin. So I started this similarly too a couple weeks ago with Recycle Your Money, and I still need to do some new videos. Things will be calming down a little bit more personally outside of work. So hopefully I can kind of get back to this. But yeah, I love the spread of people that Rob got for his first two member interviews. He got one member who's also my Discord, Raven's Child, who's actually 22 years old and kind of getting started with growth and margin. And he had D-Stone over here in the over 50 range. And so two very opposite ends of the spectrum and different time horizons and journeys. So great way to kind of kick off this whole series and kind of see where people's heads are at different phases in life and how they're using margin to kind of live out the brokerage in different ways, right? So one's doing it through growth, one's doing it more through high yield and margin. So very cool. Definitely check it out. Also check out Rob's channel, Velocity Portfolio, if you haven't. Great friend of the channel, and he's active on our Discord as well. And same for me on his. So just great to see different perspectives on a similar strategy and the different ways you can kind of approach it. I always encourage people to seek out different ways of doing it and really take what works for you, just because there's not one end-all be all of doing it, right? Everyone's goal and situations are different. So great way to expose yourself through that there. And then if you're ever interested as well too, a great way to do that as well is to go on our Discord. Great little community of like-minded investors here that are all a lot of them are living out of their brokerage in different ways and doing it through growth, through high yield income, through hybrid with options. So posting their portfolios, and you can kind of really learn from them, and people have been updating it every week, which is awesome to see. So you can join that through either the Patreon or the YouTube membership for $3 a month if you're interested. Love our little community that we've built out, and be sure to check out this finance video of the week. And if you want to support the channel, definitely give a look at the description below for all my free and paid links. And if you appreciate all this transparency, make sure to give a like and subscribe, and I'll catch you in the next video. Peace.